Thank you all for joining us. We are super excited to have you here. We hope that you get a lot out of this presentation. So we'll go ahead and just get started. So I am Desiree Gray. I am an attorney at Choice City Family Law. I will be one of your hosts today, joined today by Mike Malachek.
What's up, everybody?
Say hi. Thanks for being here, Mike. What we're here for is to answer a question for you guys. How do we secure your child support or alimony obligations? So what we want to do is cover different options that you have. There are multiple different ways to secure your support obligation. We want to talk to you about why life insurance in particular is such a great option. And then we want to make sure that you know what to include in your court orders so that we can make sure that that support obligation really is secure. By the end of this webinar, we're really hoping that we've answered the questions of why securing your support obligations are so important and how to make sure that your obligation really is secure. So before we jump into all of that, I'm going to go ahead and introduce myself. As I said, I'm Desiree Gray. I'm the managing member at Choice City Family Law. I am an attorney. I've been an attorney for over 15 years. I've done family law for my entire career. I have a ton of experience dealing with divorces, with different types of family law cases, child custody or parental responsibilities. I do have a lot of experience with helping people set up their support obligations. And then if we need to modify or enforce it, I do that pretty regularly. So why that brings me here today is that we've had it happen where people die while support is still owed. In that case, survivors are left figuring out how to move on without that financial support. This is something that I am really passionate about with my own experience in dealing with my clients. A few years ago, our firm represented a mom who had just gone through the divorce. We actually represented her through the divorce process. About 2 weeks after the divorce was finalized, the dad died, leaving 2 teenage kids. We wanted to make sure that our client was protected because now she's left with raising these 2 teenagers. They don't have a dad. They're grieving that. And now she's not getting the financial support that she was expecting. More recently, this came up just about a month or month and a half ago. It was in the middle of a child support modification case. And the dad got into a horrific accident, and unfortunately, he did not survive. So again, the mom was left with raising this kid without another parent and without that financial support. We all know that we're at least hopefully at the tail end of this global pandemic. Lots of people have passed away. Many of them did owe support. They had that support obligation. And so this does happen, and it happens all too often. So I'm really passionate about this because I really want to make sure that my clients are protected. My job is to educate my clients and to advocate for them. They don't know what they don't know. You guys come to attorneys for a reason. And so I want to help my clients to understand the different types of protections that they need and how they can protect that, in particular, the support obligation. So what I'm going to do now is turn it over to Mike so that we can hear a little bit more about him and get to know him. How about it, Mike?
Awesome. Thank you so much, Desiree. I'm Mike Malachek. I'm a financial coach and a life insurance expert. And my wife and I really started down this journey just in our own personal finances over 15 years ago. We started our agencies in 2017, and we're now regional managers with Primerica Financial Services, and we own and operate Altitude Group. We are fiduciaries in the industry. We're licensed in multiple states, and we've been able to help hundreds of people really properly protect their families, get out of debt, and earn extra money and really build a game plan for financial freedom. And here's the thing, though, is that, our story really starts like most other people out there, really. I mean, most people just lack a clear direction when it comes to their personal finances. And it would have been nice to have a class in school called money, right? Kind of just learning the basics of, how compounding interest works in retirement, how to, get the best rate on your mortgage when you go buy your first home, or even like how to save on taxes, right? And money in the household, in the typical, American household, is kind of a taboo subject. And so we don't really get to grow up learning these really kind of basic concepts that really make a huge difference in our lives. And really the American dream is changed over the years, right? What it was for our parents isn't what it is for us. A lot of us go to high school, graduate, and then sometimes a lot of us go to college, right? And we graduate with a lot of debt. We start our lives, and that white picket fence, the 2.1 or two kids, right? That's kind of the average, and that six-figure job lives right outside of that. Doesn't really exist anymore, right? Like we have to work our tail off, and we wake up 20 years later in a lot of debt, right? And most people get into debt too early in life and get out too late, and they end up giving all that money to the banks and the insurance companies. And so I'm really passionate about really providing just really great solutions for people, just easy to understand concepts, simple to follow directions, so people can really have an incredible course of success. And so I do this because that's what I'm passionate about. I'm passionate about just helping people with the two big risks in life. The two big risks in life is dying too soon and living too long. And when we have family members, people relying on us, that's a big liability that we take on. And if something happens to us, we want them to have the things that we want for them to happen if we're here or if we're not here. That's why I do what I do. So I'm going to kick it back over to Desiree. She's going to really talk about what is a support obligation.
Thank you so much, Mike. Like I said, we're here to answer the question of how do we secure a support obligation, but it would probably help to know what actually is a support obligation. So in short, it's money that's owed to a spouse, an ex-spouse, a child, or the child's parents. We call it things like child support or alimony or spousal support. In Colorado, we call that maintenance. So what it really is a financial responsibility for a child or an ex-spouse. So let's talk a little bit about responsibility. Mike kind of alluded to this about the different steps that people take and how as we get older, it seems like we do start adding or taking on more responsibility. People buy a car, they might buy a house, sometimes they get married or enter into a committed relationship, sometimes they have children, and those partners and children rely on us. We're responsible for them and we're responsible for their support. So when the family separates, the responsibility still continues. So here's something that I found interesting. When you have a spousal support obligation, you've got a court order and one of the parties dies, usually spousal support goes away. If it's the person who's paying the support who passes away, then the one who is receiving the support, the one who needs it, is usually left trying to figure out, how do I move on without that financial assistance? Well, that's what we're here to talk about. But the other part of that is child support. If you die and you owe support, you still owe that support. It doesn't go away. So what we want to do is make sure that we put something in place to prevent anybody from having to go to heaven or hell to collect from you. So it's pretty important to put something in place on the front end. So let's talk a little bit about what Colorado law says about securing support obligations. So Colorado law does say that the court can make you get security if you owe support, but they don't say what that security is. They don't list any other types of security except that they do mention life insurance. So we know that there are other ways that you can secure your support obligation. So what are some of those ways? One way is to get an annuity. An annuity is a financial tool that provides fixed payments. This is great because there's guaranteed payments. If you have a $500 a month support and you get an annuity that pays out $500 per month, you know you're set. Except that with an annuity, there's usually a large upfront cost. And so you need to already have some assets or some way to get that money to buy the annuity. You may have to add to it or purchase another annuity if your child support obligation changes, just to make sure that it's secured, or if your alimony support, spousal support obligation changes. But an annuity is a great option if you're able to come up with that large upfront cost. If that's not an option, there's the possibility to get a college savings plan. This is awesome because you have a plan for the future. You know, we are responsible for supporting our kids up until they're 19 years old. Problem with the college savings plan is that it can only be used for limited things. It's a college savings plan. It can be used for tuition and room and board and expenses related to college. So what happens if you owe support for a young child, for a 5-year-old? To make the parent have to wait until their college age, that defeats the purpose of the support. So that may not be the best option. There's also the issue with college savings plans of market fluctuation. So just because you have the money in there now that can pay your $500 per month support doesn't mean you'll have it there tomorrow if the market crashes. There's also that large upfront cost, just like the annuity, because you need to make sure that there's enough in there to cover your future support obligations. So other options, you could maybe get a brokerage account or a Colorado Uniform Transfers to Minors Act account, a CUTMA account. Again, you've got the issue of market fluctuations, and there might be tax implications. So this could be an option, but it may not be the best one. So another option would be a beneficiary on a retirement account. But same issue of you might have tax implications and you need that money up front in order to make sure that you can pay out your monthly obligation. If the market crashes, you may not have that money there. The added problem with retirement accounts is there might be limits on when you can pull that money out. And going back to that, having the money there for your monthly payments, maybe you do have that money and you want to put it into your retirement account. There are limits on how much you can contribute each year. Any of these might be great options if you already have the assets there to secure your support obligation. They might also be a good option when life insurance is not an available option. So let's talk about life insurance. Why should we consider life insurance to secure support instead of these other options? We've already talked about some pros and cons of those other options. But before we answer this question, I'm going to go ahead and turn it over to Mike so that he can talk more about the role that life insurance plays in your financial health.
All right, guys. Life insurance is really the foundation to any great solid foundation on a financial house. And so it's the basis. It's where we start building. And the reason that is because, as I said before, the things that we want for our family, this gives us the ability to be able to provide that for them if we're here or if we're not here. And so once we lay down that foundation, then we can start budgeting, saving a ton of money by just, looking through the budget and not wasting money, right? Telling those dollars where to go, right? That's important. And paying off debt, that's a huge problem in our society. Saving for retirement, college savings, and just being able to plan to get to all the goals and dreams. And so we're just going to take a few minutes and just talk about how to build a solid financial house, because that's so important just to success. And the need for life insurance maybe now, but down the road, it might be a lesser amount. And so let's talk about what that looks like. When it comes to money, the problem is that most people don't have a clear direction, right? They know what they want, but they're maybe a little confused or uncertain of how to actually get there. Well, we have digital tools that work like a GPS. If I'm here at point A and I want to be at point B, it just tells me the fastest, most direct way possible to get there. And so some of the things that we're really helping people out with is debt elimination. And and so we have a strategy to help people get out of debt the fastest, most direct way possible by utilizing a strategy. And it's incredible. And we do it complimentary for people, but here's kind of the average person in their debt. And just to pay these off one at a time, this person's going to be in debt for 23 years, spending $214,000 in interest. That's a lot of interest. By just applying the strategy that we help people develop through just by paying it off in a certain order, this person's out of debt in 9 years. They save themselves $130,000 in interest. That's a lot of interest. And so eliminating debt out of life can really help people get to the goals and dreams that they have in the future. And then the next thing that we're looking at is just to help free up more money in people's budget is here's some just quick wins, some things that we can just look around the house and find ways to free up money in that budget, right? And so internet, how much are we paying for it? Are we still paying for cable, or can we let internet be that sole thing where we just get Netflix, right? And that can save $100, $150 a month just right there. A smart thermostat could save you some good money over the course of a year, where it can fluctuate the temperature in your house where you can save money. Maybe instead of eating out as much, we get groceries. And I know groceries have gone through the roof, right? But it's still a lot less than eating out, right? LED light bulb are more common these days and a lot less expensive than they used to be even 5 years ago. Buy a couple packs of those and you'll be surprised how much you save just there. Gourmet coffee. When my wife and I were first going through our budgets years ago, this is one that we're like, oh my gosh, how much do you spend on coffee? A lot of people drop by Starbucks or a coffee shop once a day. I'm not a proponent of just cutting everything out, right? But maybe we cut out a couple of times of going to the coffee shop and make it at home to free up some money in our budget so we can budget in life insurance. We can have enough money to really have a solid game plan to make sure that our family is supported. And so this brings me to the theory of decreasing responsibility. This is a theory that we teach people that the need for life insurance is much higher when we have young kids, when we have a lot of debt, consumer debt, and we have a mortgage. Now, here's the thing. As time goes by, kids grow up, debt gets paid down, house gets paid off, right? And the need for life insurance actually goes down, not up. And that's really important to know that and to plan for that down the road, because like I said earlier, the two big risks in life is dying too soon and living too long. And just having a plan in place to make sure that, hey, we're covered, we have life insurance, and then we're building up our assets for later on down the road. So we don't need life insurance their entire lives. We're financially free. So if something happens, we have enough money to take care of our family at that point. And so here's the thing though, when looking at life insurance, we got to make sure that we find the right product, okay? Because there's a lot of different life insurance products out there, but if you just kind of boil it all down, there's actually two products. There's cash value life insurance, which is life insurance and savings plan all kind of wrapped together in one package with a bow on it. And then you have term insurance, which is just simple insurance. If you buy it, you die, it pays. And so it's just simple insurance. Cash value life insurance goes by a lot of different names. It goes by whole life, universal index life, variable life. I mean, I'll even throw in You Betcha Life because there's probably another 100 names to that product, okay? But they all work the same. It's just life insurance and a savings plan wrapped together. But because of that, it's more expensive. And so here's an example where John and Mary both had $100,000 in life insurance. And they were paying $225 a month. By the time that they were 65 years old, they were able to save $76,000 in their cash account. Now, if they would have bought the inexpensive life insurance, which is a better value, it's simple term insurance, they can get a lot more coverage for the money. So John and Mary could get $250,000 and have enough money left over to put in an investment account. And then down the road, they could have $265,000. It's a pretty big difference. So we get more life insurance, more savings. And if something were to happen, then they have both of these vehicles to provide for the family. Unfortunately, with the cash value life insurance, when you pass away, your family only gets the death benefit. They don't get the cash account. That company actually takes that. And so just knowing the difference between these two, it's a much better value to go with the term insurance and invest the difference in an investment. And so let's talk about why we should utilize life insurance to secure the support obligation. Well, first of all, it's a way to be able to access a large sum of money for a relatively low cost, like monthly cost for an individual. Unless if we have large assets and we have ability to fund other products, this is a really great way to be able to take care of our family in case if we're gone for a relatively low cost. And it's really, when you break it down, it's income protection. It's ability to pay off debt and just be able to pay for our kids' education. We can do all of those things all in one product, okay? And with the right life insurance in place, it really gives our family and ourselves a great peace of mind that our family's taken care of. And with the right plan in place, we'll have enough money down the road to take care of us in retirement. But there's pitfalls out there when we're talking about life insurance. We just went over a big one with the cash value life insurance. There's other ones, other life insurance products that really, I don't even know if you can call them life insurance. They masquerade as life insurance, but it's accidental death and dismemberment insurance and group life insurance at work. And here's the thing, is that these policies are usually pretty inexpensive because your employer takes care of a lot of the cost on it. And sometimes they're free. But really, if you break it down, the problem is there's too many exclusions and oftentimes they don't pay out. So if we're paying money for them, we're paying way too much. Even if we're paying $1, we're paying too much for it. Now, if your employer pays for it, great, take it. And that's awesome. But we don't want to spend money on something that may or may not cover you. And here's some areas that we just got to really watch out for, is that if we are paying money for it, the cost can go up every single year on group life insurance. In some cases, we have to show proof of insurability every single year. Actually, I had that for a long time. I didn't even realize what I had, but I had to show proof of insurability at my old employer to have the life insurance. Now, imagine if something were to happen to me and I had a health of, like, let's just say I had a major health event in my life, and all of a sudden I couldn't get approved for life insurance anymore because I had to have proof of insurability every single year. Well, now I can't have my group life insurance or my individual privately held life insurance. That's a bad position to be in. In a lot of cases, coverage goes away if we're out on an extended leave or if we get sick and we're out of work for a long period of time. It's not very often that somebody just drops dead, okay? Most of the time, people get sick, they go to the hospital, they're in the hospital for a while. And unfortunately, if they're in the hospital for too long, they can go on an inactive payroll. And every company is a little bit different. Sometimes it's 30 days, sometimes it's 60 days, sometimes it's 90 days, but every company sets that length of time. And I've seen it too many times where people were counting on group life insurance that didn't pay out because of this fact right here. And here's another thing, employers own these policies and they can make changes anytime they want. And oftentimes it's not in the interest of the employees, unfortunately. And if we ever leave that employer, the coverage goes away. And so it's important also to know what a life insurance consists of. Just kind of breaking down the anatomy of a life insurance policy, you have an owner of a policy, you have an insured of like the person that's being insured. And sometimes in some cases, these are one and the same. The owner can be insured by their own policy, and sometimes it's not. And Desiree will go into that more later. There's always an emergency contact. Okay. Emergency contacts are important because people need to know that there's a life insurance out there. Okay. By the way, life insurance companies, when somebody passes away, they're not looking for people that passed away. They're not actively looking for that. If they're not notified, they don't pay out, and they'll just hold the money until somebody tells them that somebody passed away. And there's literally millions and millions of dollars out there sitting in life insurance policies that somebody passed away, but nobody knew that they had that life insurance policy. Isn't that crazy? There's always going to be a beneficiary, and a beneficiary is broken up into a primary beneficiary, a contingent beneficiary. And in this case, when we're setting it up in this way, we want it to be irrevocable. And Desiree will go more into what that really means when it comes to life insurance. And so I'm going to kick it back to Desiree. She's going to talk about how to get your life insurance policy set up through a court order.
Thanks so much, Mike. So what I learned from what Mike just said is we need to make sure we get the right type of insurance. We know that there are some policies that kind of masquerade as insurance. But once we know what type of insurance, what do we want to include in those court orders? So the first thing is who owns the policy. Typically, it's either the insured, the person who owes the support, or it's the recipient, the person who's supposed to be receiving the support. There are pros and cons to each of those, and it really depends on your situation. So this is one of those areas where you really do need to talk to your attorney, find out what's best for your situation. So once you figure out who's going to own the policy, you also need to know how much coverage you need. This goes back to that theory of decreasing responsibility. Let's just assume that you owe $500 a month and you have a 5-year-old. You owe until that child is 19. That's a lot more support that you owe than if you have a 17-year-old and you owe $500 a month until they're 19. So we want to make sure that you have the right amount of coverage that lasts for as long as you owe support. But as time goes on, the amount that you owe is probably going to drop down. So we want to make sure that we build in something that allows you to reduce the amount of coverage as your support gets reduced. And then the other part that Mike was talking about is the beneficiary. Who is the beneficiary? Right off the bat, I'm going to tell you, do not make the children the beneficiary. If your child is the beneficiary and you pass away, they can't collect it until they're 21. That defeats the whole purpose of having the support secured by insurance. So we want to make sure that it's somebody else. A lot of times, well, in spousal support, or if you owe maintenance or spousal support, the recipient is usually going to be the beneficiary. There are very few exceptions to that, but most of the time, if you owe support to your ex, then your ex should be the one to be the beneficiary. It's when you have child support that you really have options. The parent of your child, the one who's supposed to be receiving the support, the one who's supposed to be paying stuff for your kid, the one who provides the roof over their head, they're the ones who need that money. So in many cases, they should be the recipient. Sometimes they're not trustworthy, they're not good with money, or there's some other reason why they may not make the best recipient. They maybe shouldn't be in control of that much money in such a short amount of time. In that case, this is where a CUTMA, that Colorado Uniform Transfers to Minor Act, one of those accounts might be a great option. Putting it in a trust could also be an option. There are other options depending on your situation. So you want to make sure that you talk with somebody, with an attorney, about what's best for you and for your situation. But again, the bottom line, don't leave it to the kids. So the next thing is, how do we make sure that the policy remains in place? You know what kind of policy you need, you know who the owner is, the amount of coverage, who the beneficiary is. So how do you enforce that? How do you make sure it stays in place? One option is that irrevocable beneficiary. If you have an irrevocable beneficiary, then nobody can make changes to that policy unless that beneficiary agrees. So this prevents the spouse who owes the child or owes the support, who gets that life insurance policy in place, and then goes out and remarries and then decides they want to leave their new spouse as a beneficiary. They can't do that if you have an irrevocable beneficiary. Another thing that you'll want to do is make sure that you have some releases in place. These releases allow you as the recipient to be able to go to the insurance company and to get proof that the policy is still in place. The other option is to make sure that the recipient is the owner. If the recipient, the one who's supposed to be getting the money, owns the policy, they make sure that it's in place, they pay their premiums, then we know that the money is there and it's going to pay out. We don't have to worry about the insured making any changes. So this is a great way to make sure that the policy remains in place. So now you have all of this information and what to put in the court orders. We know how to make sure that the policy remains in place. But next, we need to know, how do you actually get the policy? I'm going to go ahead and turn it over to Mike. He's the life insurance expert, and he can tell us, how do you get that policy?
To get a life insurance policy, you have to talk to a licensed professional that's licensed in the state of Colorado or the state that you live. And a life insurance policy is not something that you just buy off the shelf. It's something that you have to apply for and get approved, okay? And really, the decision time when it comes to life insurance is after the approval. So once you go through the medical underwriting and you get approved, then changes can be made and really to dial in exactly what you need for that life insurance to make sure that there's enough for the family. And so that's how to go about. And so if you guys have any questions about that, please feel free to reach out. We're going to give out some free stuff. I'm going to send anybody who wants it a free ebook on how money works. And I'll send you an email with that book and a video that goes along with it that really breaks down how to build a solid financial house. And so here's all my information. Feel free to reach out anytime, and I'll give it back to Desiree.
Thanks so much, Mike. I love free stuff. I don't know about everybody else, but this is great. And I've actually seen that How Money Works ebook. If you haven't seen it yet, definitely reach out to Mike. What we're offering, this whole presentation has been about securing your support with life insurance or securing it on the front end. So like I said, we don't have to send somebody to heaven or hell to collect from you. What happens if we didn't get it set up on the front end? First off, it means that you probably didn't come to me to make sure that it was set up. We want to make sure that you're protected. But if you didn't have it set up or something just didn't work, so we are offering a free report on how to collect support from beyond the grave. If you're interested in that, my contact information is there in that bottom corner. You can check out our website. There's my email address. So you can reach out to us by email as well, and we'll go ahead and get that sent off to you. If you guys have any other questions about this, about securing your support obligation, you need to talk to Mike to kind of get an analysis of what you need, or you need the insurance, then feel free to reach out to him. If you aren't sure what you need or you're still going through the process, feel free to reach out to me. I'm happy to answer some questions. So I do want to thank everybody for showing up. It has been great having you here. I would like to go ahead and open it up for questions now.
So as somebody who is just starting to save for retirement, What would you recommend in terms of like percentage of savings or what we should contribute? And should I get a life insurance policy now? I mean, I don't have any kids that I know of, but in case I did.
Yeah, great question. And so the cost of life insurance is based off of two things. It's based off of age and it's based off of health. So the younger you are, the healthier you are, the less expensive it is. So that's a great thing because later on down the road, we know that we're going to get older. That's an inevitable. So that's not changing, right? And health is never guaranteed. And so we don't know what the cost is going to be later. So it's great to be able to secure that and make sure that the price will never change on you down the road. And to start budgeting and putting some money away, and that's something that we can easily figure out how much money it's going to take for you to get to the goals that you have. And so it really depends on your situation, but there's some really great investments where you can put your money where it can grow with compounding interest into retirement that's tax free, and really great ways to do that. So great question.
And I just want to add on that if you do find out that you have kids, then if you already have a policy in place, we can work with that if the courts are involved and we have to secure a support obligation. So if you don't have it in place, you can go out and get some. But if you already have it in place, we can absolutely work with that. So when you are just starting out, life insurance is a great option.
And the great thing about it is the life insurance policies that we help write for people is that they're very flexible. So when you have kids, you can add them. When you have a spouse, you can add them later. They're really flexible. And then in situations like what we're talking about, then we can make little tweaks to make it that support obligation in place for that time down the road.
Awesome. Thank you.
Hey, so Desiree, if we were going to refer people to you, say we have a client that is in this situation and needs some legal help, is there like a ballpark on what the cost would be per hour or?
For my legal services?
Yeah.
Or just to like get a support obligation court ordered?
Yeah, for a little bit of both.
Okay, so I'm going to give you a very lawyerly answer. It depends.
Nice.
It does depend on like the type of representation. So if we have somebody who just needs a little bit of guidance, it may be something that we can sit down with them for an hour and help them figure out what they need or what direction to go into. If we're talking like a divorce or a child custody case, then that the more contentious it is, the more expensive it is. If we have just a case that it's pretty amicable, we just really need to write something up, help them just fill in the details and prepare the paperwork, you're looking at probably around $3,500 to $5,000.
Okay. Do you offer free consultations? That's the question my wife has. She does this better.
I do not offer free consultations, but what makes our consultations different than most other attorneys is we do include a strategy session. So we spend a part of that time really getting to know you, your situation, what's going on, and then we help come up with that plan. For other consultations that I'm familiar with, they do the first part of it. What's the issue? Yes, we can help you. I want to dive a little bit deeper and say, here's how I can help you.
That makes sense. Awesome. Thank you very much.
You're welcome. Thank you for the question.
All right. Well, it's really great having you guys all on the call today. We can go back to this screen here if you need more information. Please feel free to reach out anytime. You can call, email, check out our websites. If you have any questions, we're here for you guys.
Thank y'all so much for coming. It was great having you all here. Yeah, reach out to either Mike or myself if you have any more questions.